now. All right, feature by feature of the software, the chaser is one of the features that I'm only going to really go over the ones that have been most popular. And this one always comes up as one that's used mostly by, um, Puke tool users. So there's a lot of value to it for especially the when moment, the fire in the ready and fire progression. And I'm going to show it with breakouts and then some qualification on potential support and resistance. All right. But before we do that, why not bring down um, a recording clip so I could slide it back and forth and go through what everything is. We're just focused on the far right of this particular screen, what we've nicknamed the chaser. And I'm going to go over things I know, and then Dave will fill in the blanks. But if you think about volume, you think about profiles. And a volume profile is volume that has already traded, right? And so there's some value to that, but not as much value as to volume that might want to trade. Remember, price is going to move because of buyers and sellers that come in. And anytime there's an imbalance of those buyers and sellers is when we go up or down. And it's not helpful to have an imbalance of buyers and sellers to go up. It's necessary. All right. And I want one of the things I talk to myself about to help continue to teach and help people is always a better way to see the same thing, better way to say the same thing. And if you think about what we're trying to do here, we're trying to predict where price is going. But even before that, we could say we're actually trying to predict when and where buyers and sellers are going to come in. Think about it that way. Instead of getting caught up in, is it going up or is it going down? It's what do you need for it to go up or down? And you need buyers and sellers, and then you need an imbalance of buyers and sellers. And so the chaser, if you think about a profile, like bell curves are always synonymous with profiles. You see the outline over here. That's just regular volume that comes out, right? The chaser is dynamic. It's adjusting, it's changing, it's set to scale, it's gray, um, generally above and more white below. But what makes it more unique than just an aggregate? Now, if you have a dome, many of them have the functionality to say, okay, add up the 10 best bids and tell me how many are bid, how many contracts are bid in the top 10 bids and the 10 best offers. All right. And you're always going from the last traded price. So plus or minus 10, let's say. And most domes will show you the 10 best. Now you could set it, say, okay, 10 best offers total, 10 best bids. What's the total? And then even some of them will profile it for you. But that's just showing you resting bids and offers. What this has done, what we've created with the chaser, is to show additionally orders, limit orders that are being dragged around. So just think many people do this, many people have done it maybe today. If you're resting a bid, let's say at 32 even, right now the market's trading on this recording 35.75. Let's say you're resting a bid at 32 even, okay? And you're looking to buy one at 32 even. That's a buy limit. Are you below the market? Yes. With a buy limit order, you're going to be below the market. Let's say you clicked on that order, hold it, drag it, and let it go at 33 even. Now, that's how a lot of people will move their order around. If you do that, because Dave's able to track through MBO order identification, which timestamps the order, gives it an ID, and said, okay, it's a buy limit order. And if it changes, it's going to notify and update you about that also. So Dave has filtered and said, show me when buy orders, or just stay on the buy side, when buy limit orders get dragged up and down. But dragged up would mean what? If you dragged an order 32 and you then placed it at 33, you're a buyer. Would you be considered an aggressive buyer? Well, yeah, you're willing to buy a higher price. Of course you are. And so that And those are going to appear white in the chaser. And if you get a lot of white, you're getting a lot of aggressive what? Buy limit orders being moved up, or you're getting that example of a lot of buyers moving up. That's showing an aggressiveness, which is generally what you're going to need for the price of anything to go up. When you could spot when buyers are getting impatient and aggressive. When buyers are getting impatient and aggressive, it's a precursor to a breakout to the upside, oftentimes. Now, on the flip side of that, and then I'm going to bring Dave in. If an offer is set at 38 even, and you click and drag it up and let it go, you are passive. You'd be gray. If you're aggressive, you're going to click and pull that sell limit down and let it go. You would appear white. Correct, Dave? Aggressive seller.
So if it moves it down, it's going to be gray.
Gray, I'm sorry. Yeah,
If
above.
it moves it
Right.
up, yeah. So everything in there is white is supporting a long or an up move. Gray is supporting a down or a short move.
So white would often equal aggressive buyers, and gray is going to equal aggressive offers or sellers. And also the size and shape is obviously indicative of how many and where. And then at the bottom are raw totals, adding them all up. All right. So there's always sellers, white or gray, above the market in the chaser. They're going to have to be sell orders above price. And below is always going to be buy orders. But above, gray is aggressive for sellers. And below, white is what's aggressive for buyers. And if that sounds confusing at first, no problem. Understand it so it's not confusing. The shape of it should also help you understand that if you get a big fat white profile in a thin gray profile, that has a lot of upside potential. A lot of buyers, not a lot of sellers. And that's important. Now, it's also showing, Dave, why don't you explain that? What is it also showing other than just the aggressive movement of orders?
Yes, well, and so it's time based. So we're looking at orders that have the orders can be entered and they could have been resting there all day, but they never make it into this display unless they've done something in the last 2 minutes. And by done something, let's say I offered, what do we got here? Let me get the screen bigger. So let's say early this morning I offered 40s and I've been sitting there all day. And then it gets close and I say, oh, I really want to sell it now. So I drop that offer down to 38. Well, now the fact, even though I've been sitting there all day, now that I moved it, it's going to show up as my order is going to show up as 38 and it's going to be gray because I'm trying to essentially down move
Right.
down move prediction. And so then it sits there for up to 2 minutes. And if 2 minutes from now I've left the order, I'm not filled and I've left it 38 offer, well, then it'll go out, it'll disappear out of the profile because now I've not done anything in 2 minutes and I'm going to sit there. The other thing I could do is I've got no order and I just pop in an offer to sell 37s. Well, if I sell 37s, showing up great because I'm within 12 ticks and I want to sell it, and so I'm going to be gray.
Yeah, and that's fascinating because new orders are most important, and we didn't want to lose sight of new orders that come in, and so that's why we included that. So it's aggressive limit orders that get moved up and down. You know, you're aggressive if you're moving a sell order down. You're aggressive if you're moving a buy order up, and then if you're new, and so we're able to strip out SHIT that's just been sitting there. We went new players because it's that jump in interest that creates a predictable moment. Make sense? It's a jump and change in the information we get that needs to raise our antennas. And that's what price often is going to react to, something new, something different. All right. And a lot of people are really just analyzing old data. And I don't mean old in 20 minutes ago. And I don't mean to say there's no value to that, but that's all they look at. And changes abrupt, the more abrupt it is, the more uh, important it is for us to understand, analyze, and react to. Just an example for news. If something's new, it's going to have more of an effect on price. So this jumping nature that I'll show in a replay, where it's not just more buyers and sellers, but all of a sudden you got these numbers in the lower right that jump around, jump up or down to fat or thin profiles. All right. And then the expectation, like you should start talking to yourself if you don't already, if you're long, saying, come on, let's go. We should be going. Well, why would you say we should be going? If you have good tools, you should be able to answer that. We should be going up, not because you think, not because you're long, but because the tools you use are giving you all the ingredients for it to rally. There's no sellers. There's a bunch of buyers. It's all shorts. What the F are you waiting for? Not that you get emotional and yell about it, but you have good, you have the right questions. You're asking the right questions. We should go up because, and then you start filling that in with good order flow tools. This allows you to read order flow without staring at all the numbers on the dome, because there's just a lot of BS that happens in that dome. And then how are you going to be able to understand what changed and what's new? You're not. Strips out what's important and then changes to what's important. And Dave said 12, right? So it's plus or minus 12 ticks from the last traded price. That's what that means. We don't care a lot about 25 ticks away. And we just don't put a lot of credence into adding up all the offers and adding up all the bids and comparing that either. Now, Ed asks a good question. I'm going to let Dave answer it. Ed asks, are orders moved farther away from the market reflected? So let's stay on the sell side, Dave. If a sell limit order moves up, how is it reflected?
That's white because he
That's white.
thinks because that change in order reflects the opinion that price is going higher. Because I was offering 38s and I think I can get 40 now, so I'm gonna raise my offer to 40. So that's a bullish idea.
And so above price, the profile would be white. That's showing passive sellers. Now, if bids get moved lower, what color would it appear on the chaser?
That's great because now I'm thinking before I thought I could buy it. Let's say I'm bidding, I don't know, call it 33. Now I think I can get it for 31. So I'm going to move my 33 bid down to 31. Well, that's going to be great because that says I think the price is going down.
Where people would get confused, and only because you don't understand it yet, is it flips. So white is aggressive if it's below where price is, but white is passive if it's above price. Gray is
Yeah,
aggressive.
I'd put it a different way. So white means whoever's doing the order thinks price is going higher. Gray
Mm-hmm.
means
Like that.
regardless of where it is, gray means the person putting in the order thinks price is going lower.
I like that. Always a better way to say the same thing. So white is bullish, green or gray rather was bearish. That's a great way to put it. White, do you agree? White is bullish.
Yep. And then gray would be bearish.
Gray would be bearish.
And the opinions, and so we're reflecting the opinions of the participants, and the sum of the participants, what they think is that's what's displayed.
Yeah. And then not to confuse people, but if there isn't a lot of gray, there isn't a lot of people that are bearish, well, then it's bullish. And so it's is that making sense to everybody? Ed said thank you. You're welcome, Ed. Don't overthink it and then try to become simplistic in the way it's used. And remember that any complexity is already done in the algorithm and the filter and all of that that Dave's coded. So it's not like it's simple. How would it work? Why would it work? It's too straightforward. No, there's a lot going on into why price moves in the first place, and be able to depict that in a visual like this is like a kind of real time profile. If you think about profiling, profiling is always what? What's already happened, correct? It's always profiling volume that's come out. Whereas the chaser, if you could just think of the bell curve nature of it, is what the profile might look like, is the future profile, right? A future volume profile. And I understand it's more real time and very dynamic and it's changing, but you get the point. If you had someone come out and tell you today's profile is going to look like this, and we're trading down here, and the profile at the end of the day is going to look like this, which means all the volume is going to pretty much take place up in here. This would be a great tool because you'd be bullish if indeed this was the setup. Like the profile is not going to have a lot of volume in here. We're opening up at the bottom of it. And where is it going? It's going up here, and this is where it's going to hang out most of the day. Maybe one day we'll have that, but it's a potential future profile of what it's going to look like. Now, this is a small time frame stuff, but you get the point of where activity is trying to come off at. So another question: the white above price is reflected in the white number totals at the bottom of the grid. Yes, both of them. These are just totals though, right, Dave? Of
Right. So the
everything
white's
in
going to be so all the white will be reflected in the left side. So if you think about that's the idea there is everything that all the white is stuff that's making it go higher. So that's I put it on the bid side. So everything white shows up on the left, everything gray shows up on the right. In the numbers, that is.
these raw numbers in the bottom right
Yep.
that I'm illustrating.
Yep.
All right, let me show. Is there any other definitions or descriptions, Dave, you'd want to add?
No, I think you got
I was brilliant enough to cover everything.
it. Yeah, there you
Okay.
go.
I always humbly surprise myself sometimes. All right, recordings. Now I kind of had this set to go over the um the context with this. So there's context that everybody should use with respect to, hey, being simplistic. And it's simplistic for us, but not most of the rest of the knuckleheads out there. This is a congestion box. This is a chop. This is sideways trade, right? You could always anticipate a breakout through the top of the box, breakout through the bottom of the box, right? And this is generally where if it does break out to the downside, those are long saying, holy shit, they're pissed. Then they start chasing with what? Their sell orders, oftentimes. So if you do get too many longs, that's part of what helps price go down and break out. But with context, not only could you see the bottom of a box defined, but then with the triangles, which we're going to cover in another session, you have imbalances that are stacking up in this area right there. So if you breach them, get below them, that could be additional evidence of more downside. Now let's take it to the chaser. What are you going to want to see in the chaser? You're going to want to see the grays jump, because remember, gray is bearish, 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 bearish. And you're going to want to see a thin white. And I wrote a note here. Oh, in this particular session, and this doesn't change, it does a little bit, but you just want to be cognizant of a number that you use being like the only number to ever use as a benchmark. But for this particular day, and I remember I think it was Friday, it was 200. You know, when it gets below 200, these numbers down here, it's pretty low. It's not a lot. And so it trains your brain to say, all right, in this case, the buyers are really running away in the book. And so let me start right here. Let's just play it. Focus on nothing but these numbers down here for now. It's 600, 500 up right here. Boom, right there. Right there, it goes below 200. If you're already bearish using the context I walked you through and you wanted to get short for who cares what reason, this gives you an opportunity and starting to stack some evidence that this could be the win moment. What's the definition of a good location? Having the son of a bitch go your way ASAP. And so you get a fat, uh, gray profile of sellers, many aggressive, and you're thinning out on the buy side. Just not as many of them. All right. And so we end up getting the timing of this to predict follow through, especially with breakout trades. It's really important to get markets to move and break out if it's a breakout trade. You're not putting on a breakout trade and then, oh, I'm going to sit with it for 20 minutes. No, if it's a breakout trade, it's a momentum trade. What do you want to see when you put on momentum trades? Momentum. And it dumps down. Now, this was interesting, and we could get into a lot of detail with this, but this had more, even more downside. But this 500 lot comes in, this big buy order right there, and it kicked it sideways for a little bit and interrupted um, downside follow through. Other kind of information that you should be able to absorb and watch and see and watch the chaser to see if maybe it jumps and helps get you out of trades because you want to see this if you're short. All right, you want to see this number stay small. All right, stay small. If it goes up or jumps, that's when now you're not having the same ingredients for continued downside. Now, just a couple minutes later in this particular sequence, I wrote this down Friday afternoon. We had the um, the opposite happen. We had an opportunity for the gray or the sell side jump down or lower to below 200. Going right back into context, sequence, sideways range, right? Boom. It jumps down to 200, it jumps below 200, and it starts giving you the, hey, pal, if you want to get long, maybe take a shot. If you are long, you now have kind of the answer to should it go up? And you see it get below 200, was below 150 at one point, and it had some upside follow through. What I want to make sure we understand just in detail, it's not just white or gray. The laser, you could call it, that you see alongside the chaser, which is just calculating the difference. If there's more whites than grays, it's a white line or laser. We also illustrate it or mark it right here, along with the footprint and price. But I want, if you're focused on when it jumps to a level that when it gets below or above a certain level, you're like, okay, now you really have an opportunity for it to rally or break. What are you waiting for? Almost, if it's not doing it, and it should. Now we had another example in this particular session. It doesn't matter for those that might be watching this in the future, but for those watching it today, I also talked about this in the room because we had a ledge example. And a ledge example is, let this thing catch up. There we go. Is just what it says. And that is, it looks like a ledge. It's just a sore thumb that's sticking out. And in this case, it was you guys remember it from today? It was 8:44. Why can't I see the damn clock here? It's a pretty clear one. You guys remember what time it was? I think it was 8:44. Is that it? Boom. This is it right here. So, again, context. Can you kind of draw a box and a chop? Yeah, kind of in there. You see the bottom of many rotations all in here, right? And some swing lows back over there. So it's a breakout opportunity, upside or downside. Ledge is just like it looks over there. It's like one little hill you got to get over, and then you're off to the races. You could look at it that way. Just think about it's just that one last swing of the hammer and it breaks open. And if you think of the mechanics behind it, if a market has buyers and keeps finding buyers, it's not going to go down. But if it gets through a group of buyers and then it looks down and it doesn't see anything, boom, it's going to run. That's actually how price moves, right? It actually is going to react that way because that example exists. Well, what the hell happened to my slider? There it is. Um, and so if we just watch this and I don't screw up the timing of it right here, you don't have to be short or anything else. But now this sets up moments to anticipate. Boom, they hit it. Does the offers increase? Yes. Does the bids kind of stay low? Yes. Do you see the lead in getting on the right side of the market? And don't think, well, you kind of got to react fast. Not really. Once you're paying attention, it won't seem fast. It only seems fast if you're not used to watching it. Just like trying to understand someone speaking a foreign language. They're not really talking fast. You just don't understand the language. So it might seem fast until you know what you're looking for and looking for it at moments. And when you see it, it's slowing it down. And so anybody who's in competition, when they start to understand stuff, they say it's slowed down for them. Now, if it breaks 4 points and then you see the ledge, then that was way too fast and maybe a lagging indicator. But you get the idea behind reading order flow by tracking buyers and sellers, comparing them to each other, and then adding the element of aggression when people are moving their limit orders around. And it's really fascinating when you think about when you do it yourself. When you drag a buy limit order up, you're going to appear white in this um, visual. If you had a 100 lot, I think you'd probably even see it bump out. If you were bidding a 100 lot and dragged it up 3 or 4 ticks, you'd actually see probably a change the configuration in the chaser because that's obviously a big size order. This is not, and these are not orders that are filled, by the way. These are orders that are working. I don't want to get into the details of adding building an exact strategy in this session. Just understanding what exactly the colors are, what they mean, and how it could be used to see predictable moments or to sit up in your chair and get ready for something to happen, to help with potential follow through, to help covering a trade if you're riding a trade down, when best to cover a short or a long for not perfect maximum profit, but just better timing. And you could kind of see this playing out as it gets thin and stays thin. It has some downside follow through in here. When the white builds out, it kind of stumbles sideways a bit. And so do a lot of this in your own recording and take this damn slider here and do this all day long, finding instances when you could already identify a box. And now you're looking for moments, not maybe even to get on the team, but to stay off the wrong team. And then you'll have your own numbers of what is a good benchmark, less than 200 in a particular session. Like you really got to be careful when the grays get below 200 if you're short. You ain't got a lot of sellers to lean on. And if you're short, you need sellers because you're short and you're a buyer. Buyer needs a seller or he isn't going to shake hands and get filled.